Hello everyone, I'm going to explain in detail as best as I can why I enter every single trade, why we took and exited and entered every single trade today. And yeah, I'm going to give you guys my thought process, my reasoning behind everything, my overall context heading into the day as well. So it should be pretty fun and interesting. All right, so without further ado, let's get started with the video. So first things first, we are looking at the dollar, and the dollar is very, very relevant to the overall market's strength or weakness. The dollar has an inverse relationship to the market. So if the dollar is weak, then that means that the stock market should be doing well. So today, right, heading in like the morning, the dollar was very red. So I automatically knew that we should be leaning long on the market. So that was one of the reasons. All right, so the dollar was red. Had a feeling we should be leaning long on the overall market. Okay. Number two, large tech stocks. For example, Tesla, obviously right now it's up much higher, but earlier on in the day, it was only up around, it was still up I think it was up 6% in the morning. So Tesla was showing a lot of strength. And when stocks like Tesla are showing a lot of strength like this, and we see a lot of strength out of other large tech stocks as well. Microsoft, Google was also doing well. Amazon was doing well. Meta was doing well. When we see these other large tech stocks also doing very well, it is a very good sign that the overall market should also be doing very well. If the market, so basically right? If the SPY, the NASDAQ, etc. were flat, while all of these other large tech stocks were showing extreme strength, then once some sellers come in these large tech stocks, the money can start flowing in, and it'll eventually help the overall indices basically bounce. Basically, that's what I'm trying to say. If the large tech stocks are doing well, then the strength in those large tech stocks eventually even out and start bouncing the indices. All right. So that's basically what ended up happening. The large tech stocks were doing well, and the indices were also doing well. Okay. And the other reason was the IWM on a daily time frame was starting to look very, 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 very weak. Okay. And when the IWM, so this weakness that we see here cannot sustain itself to the downside. And I was talking about how we needed to see a bounce out of the IWM. This weakness was not going to sustain itself. And if the IWM started to show some strength, then the strength could permeate into the rest of the market, especially while the NASDAQ was also showing strength. So basically, that's another reason why I was leaning long overall on the market. Okay. So now that we zoomed out and we looked at everything as like a whole, we zoomed out, we took a look at multiple different reasons, right? Now I want to zoom in and look at the 1 minute time frame of the S&P itself. All right, so this is the 1 minute time frame of the S&P 500, and what we saw overnight was we gapped up. So we gapped up on everything overnight, and then once we got to this, so actually on a daily time frame, let me explain what my thought process was on the SPY. So I was so I still am adamant that this setup that we see here should not be able to break above this high. If we do, that would be an anomaly. Like, that rarely ever happens. But what I said was, so when we initially went long at 443, I was saying we wanted a retest to at least 447, 448. Once we hit to that level, 448, 449. Once we hit that level, that's going to be a level where a lot of people are going to want to go short. And as we gapped up to this level, as we came close to this Fibonacci level, the 618% fib at 449.34, this morning, as soon as the morning began, I was saying that we were going to, like, a lot of people were going to want to sell off and start taking some profit. So even though, so basically that's exactly what happened. As I was saying this, a lot of people were going to start going short. I said that the market just started to tumble. And this weakness that we saw here, I knew for a fact was not going to sustain itself. So what we ended up doing was we took light calls over here, and then we bought lower, I think. We bought lower over here, and then we bought lower again. Oh no, sorry. So we bought over here, then we averaged in over here, and then we bought again over here. And this entire time I was basically saying, stay light, don't don't hold anything that's too aggressive, etc., etc. Basically, I knew that this weakness was not going to sustain itself. We had a green gap up overnight. We were bullish. The overall market was bullish. The large tech stocks were bullish. The dollar was bearish. The IWM was showing strength. The daily time frame, even though we did come to a daily level of resistance, we should have came and retested at least 448 intraday. And I knew all of these things would end up happening. That's why I was very, very comfortable averaging in here, right? But of course, we ended up, as we dropped, I think over here, as we came over here, I think we sold for a loss over here. And then what ended up happening again is, so we were averaging down, right? We sold for a loss after it didn't work out, and then we ended up going long again. So we ended up going long again, and then this was finally when the market actually bounced. And then that worked out really, really well. And then again, because this setup eventually became bullish, and I knew with all of those different reasons why was going to be bullish. So because we had this bounce, as we sold off, I was looking for another opportunity to go long. And then that's exactly what we did. We went long literally over here, and then that worked out also perfectly. So obviously the first few trades, it ended up making people lose money, or people just broke even or lost a very small amount of money. That sucks. That's unfortunate. But all of these setups that we saw here that I took these longs on were really, really good, logical longing opportunities. So number one, with all of those things that I just mentioned as a list, say for example, all of those things that I mentioned to you guys, imagine you put them on a list, and for like all of those reasons, that is more than enough reason for a bounce to occur in the market. And that eventually, right now it's 220, right? Eventually, in hindsight, everything that I was saying was correct. But immediately, right, there's always a chance where in the short term things can just like chop around. But all of those things that I mentioned were reasons why we were going to bounce. And whether we bounced or not, we still had to take the trade, because these were very, very high quality trade setups to take. Going long when there's extreme multi-legged weakness like this are good opportunities to go long, because we cannot expect weakness to continue. Even after we sold for a loss here, I was still leaning long. I was still looking for a long opportunity. So when we sold here, we sold only because of a percentage loss on the option contract. We didn't sell because it broke below any specific levels. We sold because we were down percentage wise on the position, and I didn't want to hold based off of loss and percentage. But once we broke that low again, then I knew, time and time again, we know that when there's an so regardless of these average downs, right, just looking at this right now, right, we were holding support, made another low. We were holding support, right, after a huge break to the downside, right, and then we made another low. This down here is when they wanted to try to make retail be very, very bearish, but this move was not going to sustain itself. And in hindsight, especially when they tried to make things look very, very bearish, what do I say? That is the absolute best opportunity to start going long. And that's exactly what ended up happening. We ended up bouncing after this low. Once all of the intelligent people were like, oh, you know, it's time to be short. Oh, we have to go long. We have to go short. No. That's exactly when they bounced the market. And that's also when we went long again. And trading is a numbers game. Not every trade is going to work out, but that's our job to constantly take shots. If you're a basketball player, you cannot expect to make every single shot. You have to just continue to take shots. And that is my thought process with trading. You cannot beat yourself up if a trade does not work. You have to continue taking shots that are high quality and leave the past behind. You have to continue looking forward and make the most out of everything moving forward. And I really hope that makes sense. We just stuck to our script and it worked out eventually. So yeah, because once again, if this never happened, if we never got a bounce like this, I mean, that's almost impossible for it to not have happened. But because this happened, it gave me more of a reason to buy this dip again. So then once we bought that dip, then it sort of made things a little bit better from the morning. And yeah, that's basically it. So I hope this made sense. I hope you guys enjoyed my explanation for everything. But please, definitely rewatch the beginning. Go through all of the reasons why I mentioned I wanted to be long this morning. And that stuff is applicable every single day. So yeah, definitely take note actually of what I was saying were the reasons why I was leaning bullish this morning. And that actually does take into effect of the market. All right. So yeah, love you guys. Hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff. And I will see you guys for the next video and also tomorrow morning. All right. Take care. Have a good one.